Hey guys, what's good? Today I'm going to show you a strategy for Forex. It's the best strategy for Forex you can find. Well, everyone says that, but it is my opinion. I think it's great. It works really well. And I actually use the same strategy for my Forex signals, which if you're a group member, you know that we only lost 3 trades in a month. So the strategy is proven and it works really well if you follow these basic rules. Hopefully you guys enjoyed this video, and without further ado, enjoy the video. Bye! Right, so this is Euro GBP 1 monthly time frame. What we're going to do is just analyze everything from the monthly to the 4-hourly basis and then see if we can enter somewhere in the market. Right, so if you want to follow me along, you can open up Euro GBP 1 monthly time frame as well. I didn't go through history. It's legit the same time frames I'm uploading now. What do we have? So we have resistance zone over here. We have the support zone over here, right? Respecting the support zone, all of these candlesticks, bullish engulfing candlesticks in these two areas, confirms a trade on the monthly time frame that probably is going to retest the high or shoot even higher. Same scenario over here, bullish engulfing candlestick, shot towards the upside, started to respect the previous area of sensitivity, which was over here and over here, right? So we have now identified, an area of resistance, an area of support. Please remember that it's always a zone. It's not just an exact price level. You can't just draw an exact price level and think that it's not going to break it or not going to touch it. You cannot do that. It doesn't work that way. Forex markets seem easy to a lot of people and appealing because you can make a lot of money, but trust me, they're very hard and it takes a lot of years. I've been trading for over nearly 9 years now and I still make mistakes myself. So if you're a beginner, listen up and sink everything in. It will come with time. So now we've done our support, we've done our resistance. What else is there, right? There is a trend towards the upside. The trend is a weird thing, right? A lot of people get confused with trends. So let's say this is our first touch, this is our second. We are predicting the market. We don't know whether this candlestick will break it or not. Maybe it's going to retest the monthly area of support. We don't know that, but we need to predict the market trend, where it's actually heading. So as you can see, there was the first touch over here, second touch over here. We are expecting maybe a third touch towards the trend line and maybe a push towards the upside. Very unlikely because the market has been in a consolidation phase. Every time it touches the support and resistance, it gets respected and moves towards the downside and the upside before getting respected once again and moving in this little channel, right? So this is interesting. However, we still need to mark the trend line in case it does turn around, in case there is a push towards the upside, so we know what the hell's going on and why is it actually happening. So after we've done this on the monthly time frame on Euro GBP, let's head over to the weekly time frame and do exactly the same thing. Now this is our weekly time frame on Euro GBP. What do we have? We can see the market a little bit more clearer because now one candlestick represents 1 week instead of a month. So there's a lot more information, right? There's at least 4 to 5 times more candlesticks than on the monthly time frame, right? So we have identified already our support and resistance areas. As I said, we also need to identify what? We need to identify our mid-range zones, right? So this area of sensitivity we would have identified since it has been, in a consolidation phase as well between the monthly resistance zone, right? This is the monthly resistance zone and this is the weekly support, right? So we know the weekly support is not going to be as strong as the monthly resistance. So we are definitely expecting the monthly resistance to beat the buyers and start selling towards the downside, which is what we see. We see a huge break towards the downside with this bearish engulfing candlestick breaking into a new lower low as well, which is super important on the weekly time frame. Once you see this, as you can see, the market has been consolidating in this area zone, right? 1, 2, 3 touches, every time it's shot towards the upside. Same thing goes on the monthly time frame. It reached this area, reached this area, reached this area, shot towards the downside, right? So that's why the consolidation was happening. After we saw this huge push towards the downside, bearish engulfing candlestick on the weekly time frame making a new lower low, it's a banger of a trade. So why is that banger, Valdez? Well, that's a good question, guys. Let's head over over to the daily time frame and let me explain. Right, so once you head over to the daily, you try to, predict things as well. On the daily time frame, as you can see, we see this huge area of support. Every time it touched, it respected. Even if it broke down, it kind of respected it a couple of times, acted as a support, and even a resistance area over here, support once again over here. So we need to just mark that up. And before I was filming the video, I was just analyzing this pair so I can explain it properly for you guys. But for now, let's just not get confused. Let's forget about this area and concentrate on these 4 little squares on the 4-hourly time frame right now. So you go through the analysis time frames, monthly, weekly, daily, and then head over to the 4-hourly time frame. What do you see? Where do you think we could potentially enter a trade on the 4-hourly time frame? Let's say we opened our chart and we were somewhere, I don't know, maybe around this area zone, right? So what was happening with the market? We had that huge push towards the downside, right? Remember that weekly bearish engulfing candlestick I was talking about? This is the exact push on the 4-hourly time frame. It's just a lot more candlesticks, since one candlestick is representing 4 hours instead of a week now, right? So there's that push, there's the exhaustion. Push, exhaustion, that's the way the markets move. Push, exhaustion all the time. Literally 95% of the time it pushes like this or like this if it's trending towards the upside. In this case, it's towards the downside. Push, exhaustion, push scenario. Sometimes push, exhaustion, consolidation, push again scenario, right? So this is what we're seeing. We saw the initial push. Probably we're expecting an exhaustion. The exhaustion happens, bearish engulfing candlestick, we're probably going towards the downside. This could be a nice trade short towards the downside, and here's why. So as you can see, if we entered over here, look, we had stop loss maybe 80 pips. If you're swing trading, by the way, you can use the same thing and same knowledge on the lower time frames as well, but I'm a swing trader, so I'm doing it on the 4-hourly as I always do. So stop loss around 80 pips, that's what I like to use. You could potentially open up a maybe 100 moving average or 50 moving average to identify a nice stop loss level. However, if you're trading without indicators, is fine. Just find an area of sensitivity. Previous area of sensitivity was this zone, of course, so probably having a stop loss above it is a good idea, right? So this is where we would enter. Short, we are going down. As a forex trader, you will be splitting your take profit levels, 1, 2 and 3 levels, right? So the first take profit level would be around this area zone, since this area over here was your previous low, right? So this previous low will act as a potential support, right? So if this is a potential support, this is where you really want to take a portion of your trade. So it goes down, we take a portion over here, we move, stop loss to entry zone. So once again, we move stop loss. As you can see, we would enter the trade over here. We would have profited maybe around, let's say 24 pips. That's our first take profit level. That's fine. We move stop loss to entry. We're break even trading. We're not losing anything anymore, even if the market turns around, which I believe it does. As you can see, it does turn around. So we would get stopped out, but remember, stop loss is in break even and we have collected already some money, so we would have been in profit. Now what you can do, once again, as you can see, a bearish engulfing candle has formed, so you could potentially enter this trade once again short, maybe retest, and now that the previous area level is no longer this one, since it's not the lowest it has been. This area zone is the lowest. So this is where you ideally want to, maybe collect your profits before then or after then. Let's just see. Let's say we are entering over here. Stop loss, let's say 80. Take profit, let's say 250 maybe even a little bit more. You could potentially have it 30 to 40. I believe take profit low is pretty damn good, and this is where you would take your profit. So look, boom, we take our first take profit and we are heading towards the downside. So you would just close on your first take profit over here, a portion of your trade, right? A portion of your trade, you would portion it once again, maybe 60 to 80 pips or something like that. Let's say 77 in this case. We are going down. As you can see, it would have been a nice profitable trade around 77 pips. You could have potentially moved your stop loss once again to maybe a little bit higher, or just keep it at entry and ride the trend towards the downside, right? And that's the way you do it. You portion size your trades, take profit one, take profit two. Let's say you close, take profit one, I don't know, 50, and then the other one 30, and the next one maybe 0.20, and that will add up, you know, the one lot size trade. So this is where you could potentially enter, you know, the same thing over here. Look, we can do the same analysis over here. I don't even need to really look. Same goes with everything. Look, if we just have, you know, a rectangle tool, we can see, you know, a nice area of sensitivity. Once again, this is the support zone, another area of sensitivity, right? It's consolidating. It was consolidating like this. I believe this is pretty damn good, actually. Why is this good? Look, there was a consolidation, nicely pushed through it, right? Pushed through these lows, went towards the downside, a new lower low form, push, exhaustion. Where was the exhaustion? To the previous area of sensitivity. Previous area of sensitivity somewhere around here. We're waiting for a confirmation candle, which is a bearish engulfing candle. As always, bearish engulfing candle. We can enter our trade short once again. Stop loss maybe, you know, 80 pips. Take profit, you know, we're going down as well. As I said, we portion our trades out as always. So look what's happening, going down, and very nicely we could have even potentially entered over here as well. Look, bearish engulfing candlestick could have been a nice trade, probably a little bit more stress-free this one, because it wouldn't have went up at all. It would have been just a nice bearish engulfing candle from the area of sensitivity, and we are going down. This is a nice breakout strategy. I always use it, literally I always use it all the time. And if you don't believe it, this is my VAP trading signals. As you can see, I literally used the same strategy multiple times before. And look at our signals. We literally lost throughout the whole month. We lost 3 trades. So we're doing all right. And hopefully you guys can implement this in your Forex trading strategy and kill the markets as well. So if we have a look once again, look what's forming. So let's say we played the tool. Look, it came back to where? Where did it came back? To the previous area of sensitivity. This is the new, this was the support zone over here, right? It broke through. This support has now become resistance zone. So this is now a new resistance zone for these candlesticks. It's shooting towards, you know, the upside, downside, again, consolidating, push, exhaustion, push scenario. So this is the push. This is the exhaustion to the previous area sensitivity. Like 80 to 90% of the time this happens. So exhaustion to the previous area sensitivity. Look at this. Right, resistance, support. Let's see what's going on, right? Push in. Look at this. It broke out. It broke out the low. As you can see, this was the lower low, right? It broke through it. What does that mean? It's probably going down, probably gonna have an exhaustion once again, and then probably try to trend towards the downside, attempt to break the daily area of support that I previously marked on the daily time frame. If you just watch the video back, you will see it. So you could have potentially even entered over here. Look, a bearish engulfing candlestick, because you know this was the area of resistance, right? This was the previous area of sensitivity. Getting respected. Look, 1, 2 times, you know, the third time bearish engulfing candlestick indicates that probably sell pressure is coming in, and it went towards the downside. Your take profit one low would have been somewhere around this area or this area over here. You know, it's a zone, so it's somewhere in between there. That's where you should be aiming to have your take profit one level. That's when you would portion your size. We're going towards the downside, making even more money, and then maybe wait for the market to trend towards the downside and maximize your profit gain. So as you can see, if we entered over here, we would have opened up a short position, and look at this, you know, stop loss just around here, take profit. We are going down very nicely, 134 pips in profit and running like crazy. You know, you would have portioned your trade out, as I said, around this area zone. You move your stop loss to entry. You're risk free now. You're trending towards the downside and making a nice amount of money. So hopefully, guys, it's clear for you. You know, as you can see, consolidation phase over this area, consolidation phase over this area. Same thing over here, right? A consolidation phase. Look, this was the support zone. This was the resistance zone. As you can see, very clear, you know, push, you know, this was the push, exhaustion, consolidation, as I said, push towards the downside very nicely. We would have entered here because we know that this trade very likely will reach this area, and even if it turns around, then we moved our stop loss to entry, we would have broke even, we would have collected already some portion of money, which we can then, you know, bank and do whatever we want with it. Now let's see what the market does next. Look at this market push towards the downside, and this is the real-time scenario. As I said, look, a bearish engulfing candlestick closure. Once again, it's consolidating. Look, the previous area sensitivity was around this area, so this is the resistance, this is the support. Bearish engulfing candlestick, but we would not enter this trade yet. Why? Well, because it hasn't reached a new lower low, right? So this could be a strong support. Potentially the market could turn around again, once again over here, maybe in this area zone. If it turns around and gets a small bearish engulfing candle like we had in the previous setups, then we could potentially go short to retest this zone and potentially even break it to maximize our profit gain. And this is the simple strategy. It might sound confusing because I confuse things a lot, but hopefully you guys enjoyed this video. If you did, smash that like button, join my VIP trading signals. We're dominating the markets, literally dominating. A lot of happy lions, and I'm happy as well. Take care, lions. Have a wonderful day, stay safe, and goodbye.